with everything that Tampa Bay has to offer, I think there's a lot of opportunity still. People have to educate themselves first, but just get into the market, get your feet wet and test something out. But just knowing who the key person is for your asset class, I think is going to be big on knowing where to look to find the next opportunity.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello, and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, we've been talking about Miami and Jacksonville and Ocala, and it's been a while since we've talked about the good old Tampa Bay market where you and I live, particularly single family and small residential, multifamily.
Yeah, and the market's changed so much. I think the last time we spoke about it was probably about 2 years ago in the middle of COVID. So it's high time we just dove into it and see what's going on in this market, which is a fast-changing market.
Yeah, it's a fast-changing, it's hyper-inflation going on in real estate asset classes. It's been a really tough market for real estate investors to not get thrown off the back end of the bus. It definitely is moving very, very quickly. Some areas hotter than others, but I think across the board, the Tampa Bay market is really on fire. Steven, wanted to take just a moment to give a shout out to those that have taken the time to give a review to our show. It's so important for you guys to do that. If you've not done so, please go on to the iTunes store or onto Facebook, or you can go on to any of the app stores with Android and leave us a review. It is very important when we are trying to book this show to let potential guests know that we have a good listener base. It's a good way for these folks that come on the show to invest their time with us because they know people listening are perhaps people they could do deals with. So if you've not done so already, please go and leave us a review. We'll give you a shout out for doing so if it's a 5-star. And any bad Steven reviews, I read twice. And Steven, anything else you want to add before we roll into our guest?
Let's roll into Tampa and see what's been going on. Today we have with us Jeremy Kloter. Jeremy is a Marine Corps veteran turned broker. And he's used to wars because actually he came onto our podcast before, so he's a survivor. We know that. He turned into a broker. Jeremy was raised in the Tampa Bay area. Jeremy is the founder of Outfast Property Management, a Tampa Bay property management company that manages residential and multifamily properties. He's also the co-founder in a real estate investment fund, 506B Reg D, a real estate brokerage mortgage company, and an architecture firm. Jeremy himself has been an investor since 2013. He has been recognized in the Florida Realtor magazine and is a trainer for the Landlord Property Management Academy. Jeremy, welcome to the Invest Florida show.
Hey guys, thanks for having me back on. I guess it's a good thing that you're willing to have me back on. Always appreciate you guys.
No, Jeremy, we appreciate you. You're a staple here in the Tampa area on this residential investment and property management. And so it's always good to sort of get caught up. And we've been talking about a lot of different areas around the state here recently. And so we're happy to be able to get caught up with you on what's going on in our market. Before we got on the air, we were talking about that I own a couple of properties, and man, I get just absolutely banged on by people. And I'm just wondering how you're surviving. It was crazy as the market is on the brokerage side, and what you're doing with some of your clients, and what are they seeing in the market, and how are they reacting to these elevated prices?
Yeah, and it's an interesting contrast from our last conversation, which we had in July 20, which was really the heart of the COVID epidemic. So we're in a new world now. We'd love to hear from you what your perspective is.
Yeah. No, thanks, guys. Appreciate the opportunity to provide some insight. And yeah, when we talked before, we've we've just about more than doubled in size since back then, and been positioning even more into the multifamily space with the different clients and different things. So, throughout each week, just having different conversations of, not only local investors, but I'm sure just as you guys are seeing probably in the commercial space, different types of asset classes, the amount of people from outside of the state wanting to buy here, or at least inquiring on different things. And so it's been, a frothy market for those of us that are able to take advantage of what's going on. And now that we're kind of past most of the COVID stuff at this point, I'd say we're just continuing to grow and build out the operations. And, it's just a really good time for transactions. It's challenging for investors to find the right deals. And I think that's where the relationships are becoming even more important when people are starting to look in the market, just the guys that really specialize in the different price ranges that the buyers are looking for. So that's what we've been able to kind of just try to do as we're talking with investors, is just pairing them up with the right people to try to look at different deals. And, I think that they're having to get aggressive to have any shot at any of the opportunities that are floating out around at the moment.
So what are the anecdotes? Give us some anecdotes about what you're hearing on the residential side, because the last property I bought was over in St. Pete. And, I bought it from a deal that fell out that had been under contract, and I thought I got a pretty good price for it. And since then, this is in August of 2020, I've had offers for more than twice what I paid for it. And I just don't know how it's justifying the pricing. And you look at the rents that are being collected, and rents are going up like crazy, but they're not going up as fast as the land value. So I'm just curious what you're seeing in terms of how people are dealing with this really hyper active market.
Yeah, I think that one of the benefits that we have is the amount of population growth, and just whether it's taxes or people tired of their politicians and moving into the area, that's kind of supercharged what we've already had going in favor for us in the local market. And I think that a lot of those people are coming into the market with decent incomes as well. So whereas we may be raising the prices on different rentals, and it's pricing some of the current tenants out and they're having to move, it's being replaced, at just such a quick pace that it's not really impacting the vacancy time periods and stuff like that. It's still a pretty active space for people to be interacting in. And just like you said, I have, someone just looking for, let's say, even just a duplex somewhere in the area, and I'll just start at the bottom and say, hey, even if kind of the worst area you could be, starting from the bottom, this is what you're looking at. And just like you said, you used to be able to get a little duplex, 2-1 each side for, call it, maybe 150 or something just a couple of years ago. And we have a couple of those, and we're managing, and, refinance is going on at like 250, 260. And, it's just crazy to think that just in a couple short years, that stuff's been exploding. And like you said, the rent growth, I think, on average across Tampa Bay area was like 20, 25%.
That's an incredible number.
It's not going to be sustainable forever.
Yeah, that's not sustainable.
It's working for some people that can hold on, but it's obviously the lower market's getting priced out, and they're going to have to just be traveling further to work or whatever the case may be. But there's just such a lack of inventory that, the higher rent prices are just still going off the shelf, even if it's aggressive compared to the comparables that we see.
It's a big problem for the community, actually, because a lot of the working force just can't find housing right now. And, I was approached by one guy. He asked me if I do residential, if I could help him. I couldn't, but, he just worked in a storage company, and he was willing to pay like $1,800 a month for a rental. It's unheard of. They're going to 50% of their take home.
Yeah. And my wife and I bought our house, kind of Tampa Heights, Ybor area, 2018. And, I have studios in some spots, or certainly ones that are going for what we're paying, on our mortgage. And I was VA, so I didn't, put any money down as well. And, we just hired somebody on Monday, and, she was relocating from Orlando back to being from here in Tampa. And so I'm obviously looking at, okay, well, I'm paying her X, and luckily we kind of swung a deal with one of our owners for her to move into one of the units at a slight discount. But other than that property, just the starting rent of anything else we had available would have been, probably creeping up on like 40% of the income of what she was going to make. So we were able to help her out there. But yeah, it's definitely a challenge. And, downtown St. Pete, some of those other spots, even just these real small studios are going for $1,200 or something. And that's like, a couple hundred square feet, and that's a prime spot for some, your bartenders, your waitresses, whatever it is. Yeah. So much of and those are even challenging classes to work with because a lot of it's so much tips and cash based. Yeah. So when they show pay stubs, it's like they don't make anything. So a lot of those classes are difficult to work around.
It's, I bought on a tax deed sale, the old style, one of the last, before it switched over to all digital, where the insanity started taking over. But I bought in person, literally on the courthouse steps type of a deal. And that was in 2013. I paid $43,000 for my condo as a tax deed sale.
Oh my goodness.
And at that time, the properties were selling that were non-tax deed, like, the regular owner-occupied homes for like $90,000, something like that. And I had to put some work in. I was probably going to be $20,000 of work. So I'd be,
sure.
After repair value, I'd be somewhere in the, $65,000 range, something like that. And still nice little margin for me. And I was going to live in it for a couple of years. So it's always been my strategy: live for a couple of years, take the IRS 1120, which is the personal write-off on a home. When you sell it, it's the greatest deal ever. It's like, you don't have to pay any capital gains at all.
Right.
You sell your home and it's $250 for a single, $500 for married couple. And that's what I've been doing for, several years now. And I had bought another property and then someone bought it out from under me. It came in maybe a deal I couldn't refuse before I even got a chance to fix it. This is like 2015. And then 2018, I found a lot in South Tampa and I split the lot and I was going to sell one of the lots and build on the other. So the idea is to keep, doing these 1120s, but then somebody came and offered me both lots for a price I couldn't refuse. And then I bought this property, so I bought this property over in St. Pete that I'm going to build on, but I just haven't started yet. I haven't looked at my condo pricing in probably 6 months to a year. Jeremy, $260,000 those condos are going for.
Yeah, that's a nice cash out refi.
$260,000. I'm kind of at a point where I'm gonna have to start paying taxes on. Like, I'm not even gonna qualify for the over and above on the $250,000 and that was just a crappy little property. Man, it is a crappy little property. I would have been gone from there a long time ago, but anyway, sometimes things happen and it just don't work out your plans. But man, it's you look at it now, and when I bought the property, we were getting rents in there we talk about the 2% rule. This is a funny thing, and I know I'm jumping around on you a little bit here, but
yeah, you're good.
The people say 2%. Hey, I'm looking for something with the 2% rule. Well, 2% rule has never existed in hot areas of Florida. Not since I've been paying attention. The 2% meaning, 2%. The rent that you get on a monthly basis, and the gross rent should be, as a rule of thumb, 2% of what the value of the property, the purchase price of the property is, the value of the property is.
Right.
And we've never really experienced that. 1.25%, would kind of be the average on the lower, the Class C type areas. But man, you look at stuff now, and it's like 0.6%. Like, you look at the numbers that people are buying on these properties, 2%'s gone, 0.6%.
Yeah. Then especially once you factor in the debt service, it's just crazy. So we're working with a client now that, they're able to collateralize some of their brokerage account, and they're offering on a 6 unit here in Tampa. And some of the other people that we've worked with in the last 18 months are multifamily space. They're out-of-state investors, maybe 1031s, that type of thing, or they're just, maybe they missed the 1031, but they're still selling everything up north and moving down here, and they've just been, it's still a better opportunity than where they probably were. But a lot of the people that are local buying stuff are really struggling because they're just, they're used to what the market is here, but you have all these people with either more cash or just even worse opportunities in their market, just flooding into the space and offering, 6-figure, hard escrows or not, non-refundable on the front end, just day one of a contract. And it may still be financed, but they're just super aggressive on that sort of stuff to lock in the deals. And, so that's why we try to stay in tune with what the multifamily guys are doing, guys like Colliers or CBRE, Marcus Millichap, Franklin Street, just keeping in tune with them. Like, what are the offer packages looking like? So when we're talking with investors, kind of helping them understand the competitiveness, and then, we just, any buyers we get, we just refer them right over to those guys. Cause I think it's in this market, you have to be on the multifamily stuff, direct to seller or direct to the listing to even have an opportunity. I don't really see the buyer rep stuff necessarily happening in the space. And even I've heard some of, some of these listing brokers maybe getting a little small piece of equity on the back end to kind of sweeten the deal for either more deal flow or just incentivize them to try to bring more deals to certain buyers by giving them a little bit of, juice on the back end as well. I think that's going to become more common as a way to ensure that people are getting the right opportunities or getting their deals looked at.
We have these folks that call us, and I get a call every week on this. And I know Stephen just talked about it on Monday. He had somebody call in and say they had a referral or something. And of course, I think it was a residential agent, wasn't it, Stephen? They said, "Hey, I got a referral for you. Are you going to treat this guy right?" And blah blah blah. And he's like, he's looking for 6 or 8 unit multifamily on the buy side. New York, yeah, on the buy side, this is one of my top clients. You got to take care of him. And it's like, dude, there's I got a Rolodex of 3,000.
Here's the
buyers.
line of 100 other people that are the same exact thing.
Yeah,
and it is just a challenge. We have we see some stuff that's happening a little bit off market from some of those guys, but you got to be, just a super qualified buyer, probably closed with them before to even, once it's out in the marketplace, it's already been shopped to, 1 or 2 buyer lists before that. So not saying that it's a bad deal if it's on the market, but, you want to be on the list before the list.
Yeah, so can you talk a little bit about the kind of cap rates that you're seeing now?
Yeah. So a lot of the stuff that we've been seeing, let's say 10 units plus has been 5, high 4s, even seen some like low 4s. And as we were talking before, we had a client that, I think it was about a year and a half ago now. They bought over 20 units for, I think it was like a low 4. And due to the rent growth and everything, I mean, that deal is smoking right now with what we've been able to do on renewals and take advantage of the market. And at that time, people were kind of passing on it because of the cap rates, but they haven't gotten any better. And so I think that some of the investors now are getting a little frustrated because they're like, man, I really should have pulled the trigger. But at the time, it just didn't seem like this great opportunity. But, at least for now, we're seeing kind of the rent increasing and stuff, and it won't continue forever. But some of those people, I think, are reconsidering the current marketplace and just trying to get a hold of something.
One of the things that I think is worth mentioning, and the reason why probably Tampa Bay is different from a lot of other areas, although there are a lot of areas on fire, is that it was just written up in Zillow that Tampa is like number 1 on the list in terms of rental growth and increasing living expenses and things. So people have been in a fortunate position here. The market's just carried them up, even if they made mistakes in the past. But I'm pretty sure it's not the same thing as happening in other parts of the country.
Right. Yeah. And people will call in and, we'll talk to them about, also just the short-term rental market, whether it's here on Tampa side or over St. Pete, Clearwater, whatever, on that side, and having some comparable market activity for both sides of the water. And, there's I think just that lack of inventory, especially under, like 50 units. And so I think that you're also seeing just some of the bigger institutions or bigger companies coming down into the smaller unit count just because they're getting pushed there because there's just lack of deal flow or opportunities, and they're willing to take on, smaller assets.
Well, I'm following very closely what's going on over in St. Pete because it seems to be ground zero for the elimination of the single family zoning in certain neighborhoods.
Yes.
And I mean, part of the issue, and it's amazing, Jeremy, I know you're getting your MBA. Have you finished your MBA?
So when I had Nova, I was like right at the tail end of my GI Bill. And so I just put it on pause. So I was like about halfway or so on doing it with UT. So it's just on pause right now. Gotcha.
But I mean, you're a guy who's been, educated in business and you understand economics and that was the point. But, you see on Facebook, these people complaining about, the greedy investors and the greedy landlords raising these rents like without justification. It's like, dude, why don't you just take an economics 101 of supply and demand.
Yeah, unless the city and like even just the kind of rent control thing floating around, you can't penalize the owners without getting some type of incentive from the city. Taxes and stuff like that aren't slowing down. Insurance costs are 30% plus increases and stuff that is happening. So it's not sustainable to implement something like that without the owner getting some type of benefit. So that'll be interesting to watch if any that catches here in our market.
Well, all the YIMBYs or the NIMBYs that not in my backyard people are just, squawking and raising hell about it. But then they'll also be at the same city council meetings raising hell about developers and greedy investors, jacking up rents, which is nonsense. It's a supply and demand issue. We have unprecedented numbers of people coming into this area at rates we've never seen in my lifetime. And it's a direct result of fleeing, people realizing that they don't have to live in these high tax states anymore. And that Florida treated Corona differently for better or for worse. It's shown to be desirable, and people can do their Zoom meetings, and they've left New York and they've left Chicago and they've left California and they've come here and they're coming in massive numbers. And we only have so much land. Pinellas County is already the most densely populated county in the area, and it's not really that densely populated when you compare it to New York and LA and San Francisco. And so why don't we go back and look at some of these other places? I'm not saying model them, but you want workforce housing, you want places for the teachers and the fire people. Well, let's get some more housing rather than single family, which is a complete waste of space, closer to where these people can work. But it's like you can't please these people. They're going to complain about that additional density, the multifamilies and the townhomes being built on single family lots and then getting rid of the single family zoning. And they're also going to complain about the greedy investors and the developers basically putting the magic wand on the market, and you can't please them. But you got this. The problem is a supply and demand issue, period. That's the issue.
Yeah. I think you bring up a good point. Like in the, probably about 6 months ago, I was just poking around on the MLS, and I was just like, let me pull, how many ADUs or brother-in-law suites or whatever are just in the area. And I was just looking close to where I live, and man, there was a lot. I was just looking over the transaction history last couple of years. And I think you bring up a good point with them giving the availability in some areas to be a little bit more flexible to add additional units on some of these properties would make a lot of sense to help with that, that a little bit as well. And it's, it's a great, we have some that we manage with, that kind of setup, and it has its own challenges, but what else are you going to do? You can't really build affordability unless there's massive incentives from, the state or whatever, the county, because the cost of material and labor is just continuing to go up, up and up. And so you can't build affordable housing unless there's some crazy incentives to do so.
Yeah. So, the real estate is always difficult when you have either extreme. It wasn't too long ago that we had the extreme that there was everything on the supply side and nothing on the demand side. Now there's everything on the demand side and not on the supply side. And people always say it must be great to be doing real estate now, but it's harder to do business because there's no supply. But I was just curious what your thoughts are on what the next steps are coming down the pike, how the market is evolving, and what investors should be doing. It's not an easy path now.
Yeah. So one thing that we see happening, and I know that there's been it's been a hot topic at some of the different industry conferences and stuff, from, an investor standpoint, like how can we, as maybe smaller investors capitalize on the marketplace, and, the yields for these big funds or these institutional investors not being in other asset classes and flowing back into real estate. The build to rent model is becoming more and more popular, or the idea of it. So we've looked at doing some small, one-offs in that kind of realm, where if you're a smaller investor and you're either finding the land or being able to look at some of the opportunity zones and some of the other areas where you may be able to add additional units as a possibility as well, to just look at other strategies of that there's definitely a demand for, and being able to flip some of the stuff to some of the bigger people, or if you have the capacity to build some stuff, having pretty much people ready to go to buy new construction as a rental. We had a conversation a couple of weeks ago with local builder, and I let them analyze our portfolio of what we manage. And they came up with like 3 or 4 lots or 3 or 4 properties where there was ability to add 2 or 3 more units on it. And one of them was just basically a single family property. And so there's some people getting more creative with the ways the local rules are changing and looking for opportunities where everybody else is missing. So out of in that example, they were just looking at single family. So, it was a really small percentage, but there was a couple where, hey, this owner doesn't maybe realize the value they have, and this company will offer to do like a consulting piece if necessary to say, hey, there might be a room to add some more units on this property to just find some extra value, or the build to rent stuff is a little more interesting as well.
Yeah, that's a good point. You got to figure out a way to get creative to increase your deal flow. There's no other way, because there's so much pressure on the existing inventory of homes. I mean, you look at the days on the market of and how quickly properties flip, and when they get listed, it's really insane. And I'm going to talk about creativity. We talk about something. I got to say something here, Jeremy, about, before we got on we started recording, we talked about being creative and getting deals. Okay, so when you're getting creative to get deals, let's not text people, spam them. I can tell you right now, if you're texting me to buy my property and say you want to sell your property, I will put you on a list. I will never do business with you. I got to make this clear. I got to let people know this. I cannot be the only one who does not like being spammed.
Well, I just want to point out, Eric, that the only thing about you not worse than not being texted to buy your property is nobody texting you to buy your property. You just have to look at the other side.
Eric, you shouldn't own just hot real estate in the hot spot of St. Pete. Maybe buy in the worse areas.
Yeah, I mean, I'm over there. I've got that property over there in the just north of downtown, and Kathy Wood with ARC Investments is adding. I don't know, how many people in the St. Pete market making 6 figures a year. They're going to be completely driving up additional properties. I'm sure there's some of those people scavenging around at my lot. Guys, don't text me, please. We'll just leave it at that.
And his number is, do you have a pen?
No, don't text me.
Yeah, it's funny. We had a deal that we just bought our first lot like 6 weeks ago to do our own internal new build and kind of test it out. But I think just the relationship piece is continuing to be just such an important part of deal flow. And we heard about the lot from someone we know, and within 2 or 3 hours, we had escrow submitted, put it under contract. You have to have the ability to really act fast in the market more now than ever. And we could easily just probably flip that lot for $30,000 without even doing anything. And just the speed component and getting out to your local investor meetups if you're able to, if you're out of state, just trying to build a little bit of a network. But that's why we've been so big on the local meetups that we host, and you guys were doing that for a period as well, just to continue to keep your ears to the ground and meet more people that have potential opportunities, because we don't see any one area that gives us a lot of deal flow. We just have a lot of areas that give us 1 or 2 here over time, and it works. But the relationship piece is just becoming even more crucial.
So Jeremy, there's one nugget you just gave for investors is be able to move really quickly. And I guess, what I tell clients is to have the funds ready, be there to move fast. But you can't, in this market, try to put a property under deal, then start at the beginning to try and line up financing. And
oh God, and all the contingencies.
And people just don't understand
on this. And it's like, dude, you had no chance. Why are you wasting people's time putting in it with the 15 contingencies in there?
Right, and it only takes, it probably only really takes 1, but 1 or 2 of kind of kicking the tires. And I think people, realize pretty quick. So there's a lender that's financing a lot of multifamily that our clients are doing. And so I had a guy that started to kind of look into the multifamily direction. And I'm like, hey, just have a general conversation with them just to even understand what the rough parameters are for what they're able to do for financing. So you just get all this stuff out of the way ahead of time and you can go in. I mean, on some of the stuff that you guys have closed, you guys had mentioned you could close some big deals. Was Was that buyer represented side or seller represented on some of the commercial stuff that you guys just closed recently?
Both.
Okay.
Both buyer and seller. And, it was interesting. And this gets back to one of them was a referral from our affiliate in Chicago that said this guy is starting to move his operations down to Florida. He just, feels like the time's right. And, of course, Corona's sort of pushed him over the edge. And, and so he came down. And he asked one of my agents to help him find something, and he's like, man, this guy's wasting my time. And I said, you might be surprised because what he's paying in Chicago is going to be a hell of a lot more, and what he's selling his property is a hell of a lot more than what he's going to be buying here. And even though it's sky high pricing here, and so he's like, I said, just spend some time with him and send him over some stuff that's listed. And he knew one property that was just coming on the market. It was technically off market, but was in the process of coming on the market. So the agent had told him he's going to be listing in the next couple of days. Going to come on LoopNet, and the guy flew down that day before it even hit it hit LoopNet and had it under contract in cash deal, $5 million.
Yeah. I think I had one of my friends at Franklin Street. They posted something on LinkedIn. And I texted them about it. They're like, "Oh man, dude! Like literally 3 hours after, I think it was just a land deal. The guy, all cash, was like under contract. 1031 had to find something. We've had a couple. We've had multiple investors that were just tired of the politics in their area and flushed them down to this market. On some of those deals that you guys have worked, what were some of the things that you guys, maybe saw as interesting on the offer that made it, more advantageous for your seller to take it, or any interesting things that you've seen over the last year develop on how people are making offers, or maybe just more sizable deposits, throughout the process or anything?
Well, what's happening is that when you start getting above, say, $1 million and change, you're moving into an asset class that a lot of people don't necessarily understand. Let's say you're talking about a small $2 million industrial park, that's got 6 units in it or whatever. A lot of your typical real estate investors don't understand that market. It's a really good market. It's like the vacancy rate in that market is like 3% right now. There's so much demand, Jeremy, on that. These poor contractors have been pushed out of the market because of how much pressure there is on the industrial space. And so you're still able to see 6.5, 7 caps on this type of stuff. And so you get these investors that actually have some money that migrate over from multifamily that are looking at 4.5 caps on their deals, and they're going, is this for real? This is a 6.8 cap? It looks pretty good to me. Like, what are the risks? And we talk about it, and they're like, okay, well, let's go. And when this is a 1031 exchange, they roll over in there. It's a pretty good deal. And so,
my brother works and does a lot of in self-storage, works for a company, and they sell facilities across the U.S. And so it's interesting talking to him a little bit about that industry. But one thing that they've started to take a harder look at is like car washes and stuff, and getting 10% or north of that in car washes, and just seeing the interest levels peak as you said, as either different markets within the U.S. or different asset classes heat up or cool down, moving around and seeing what else is out there that it's going to drive investors to.
Yeah, I mean it's we had some investors we dealt with on suburban office parks, and now this is right around COVID, and I try not to engage people too much on Facebook. There's something about Facebook that makes people want to just fight with each other. It's just toxic, and I think you started a thread right around the time of COVID. And asking about office space, just going to the garbage can, who's ever going to go back into the office and blah, blah, blah. And I said,
oh, yeah, I remember that.
I just removed myself from the thread. I made one comment about the fact that people are going to be people and that you can't run a business by Zoom meeting, and that the market is probably going to be some opportunities for people to step into that market. And now's the time. And I think I just got blasted about, you're an idiot and you don't know what you're talking about. And it's like, okay, I got COVID year, I had my best office year ever. Meanwhile, it was funny because I made a $75,000 commission on a deal. Literally, I was in the middle of doing that transaction with somebody buying exactly what I'm talking about with an institutional level investor who knows what he's doing. And meanwhile, on Facebook, some guy who's, I don't know what his job was, an architect or something, basically calling me an idiot that no one was ever going to go back in the office again and no one was ever going to buy them. They're just going to zero. It's like, okay, seems like the best good time to buy to me.
We are. So we're near the Buck Stadium, and it's a 4-story building with a bunch of offices. And we had a 4-year lease that ended, I think right in the middle of COVID, June. I think it might have been June 2020 or something. Anyways, we looked around because we're like, maybe there'd be some opportunities, and there was nothing available. And we're probably still a little bit under market where we're at. We upgraded the size of the office. We moved to another floor, and I'm like, good grief, if we had to move somewhere else for what was the space we have too, I mean, we're still paying a good bit on the lease space, but we had looked very briefly and we're like, okay, well, there's just nothing realistic that, the prices weren't doing anything. They were definitely not going down. So it was a little surprising for us, as we were looking at, all right, let's sign another 2-year lease here and see what happens then. But yeah, I think it just, at least for ours, this sizes and stuff that we're in here, that are in the building, is where all these companies, even if they decide to downsize, they were just downsizing into what this office building has available. So yeah, there seemed to be no shortage of people trying to lease space.
And it actually, there's another things like, people don't understand, but they're going to make very strong opinions on Facebook about it. But, South Tampa, it seemed like COVID did the opposite. Like all of a sudden people just came out of the woodwork and go, oh, this is a great time to buy South Tampa office space. And that probably in the middle to the end of 2020 to the beginning of 2021, we started seeing an acceleration in like the individual owned office space in South Tampa. And we actually had an offer being battered around that the deal ended up falling apart, but we're north of $500 a square foot for South Tampa office space to buy. Jeez. $500 a square foot. Think about that. I mean, that same deal could have been had in South Tampa 10 years ago at 125, 100. Yeah, it's at 500 now. Yeah.
Yeah.
So I mean, anyway, Jeremy, tell us what else. I know we got to let you go here soon, but is there anything else that relevant facts that are happening in this area? I feel like we've been walking through a desert here for a while. We haven't talked about our area, so we're really fortunate to have you on to talk about it. So is there anything else you want to share with our listeners about what's happening in the greater Tampa Bay market right now that might be a golden nugget for?
Yeah, I think it's just making sure you have a team like you guys around if they're looking at that type of asset class. If it's a multifamily, we're happy to chat about that. We have a pretty good network, and, we have a couple different things that we have with the brokerage and, the new builds that we're designing with the architecture side and the mortgage piece. So just kind of keeping our ears to the ground. But I think there's still, if you have a long-term vision, I think it's hard to lose in our market. With everything that Tampa Bay has to offer, the cost of, just the affordability still compared to our competition in other states. And, I just see there's a lot of new construction, a lot of commercial redevelopment, a lot of, even near my house, they're doing new builds for $750 or $1 million that are just like, man, the tear downs are continuing to increase on where people are expanding. So I think there's a lot of opportunity still. People have to, educate themselves first, but just get into the market, get your feet wet and test something out. But just knowing who the key person is for your asset class, I think is going to be big on knowing where to look to find the next opportunity.
And one more comment before we let you go, because we had Anna Bozovich that she talks about the Miami market with us and on a couple episodes ago. And she was talking about the enormous amount of cash buyers, particularly over $1 million, that are still in the market. And I think in Miami, what did she say, Stephen? It was almost 80%?
Yeah, everything's cash now.
Everything's cash. Over $1 million is over 80% in Miami, in the South Florida market in cash. We're still seeing the same thing here. Are you still seeing the same thing in your neck of the woods, Jeremy? Or are you seeing some slowing of that heavy cash purchase?
I think that, for the multifamily stuff, a lot of it, I think, people are still trying to take advantage of the lower interest rates, but that some people have flipped. They've had the cash available, so to get the deal, they're having to go in and do that. One thing that we see becoming even more popular is, maybe a 2-year bridge loan on some of the multifamily. So being able to perform and increase of rents and NOI of the property and stabilize it and get out onto different types of debt. I think people are maybe even flip-flopping between the two depending on the deal and what it takes to get it done. But that's something that we've seen, I think, become more popular is this type of short bridge option for the multifamily space. And people, luckily the market's been playing their favor, but could also get caught in a bad situation if it doesn't work out. But that's what we're seeing a little bit more of, people still trying to take advantage of the good financing while they have it. But some of your savvier investors, or let's say more well capitalized, are maybe even switching to cash just to get that little bit better of a deal. And then they're still planning, the refinance in 12 months or whatever, just being pretty competitive, but switching depending on either the deal or just the opportunity. Maybe is having the ability to do both is playing in their favor.
So, Jeremy, if people want to reach you to learn a little bit about investing with you or your fund or property management, how can they reach you?
Yeah, so if you just Jeremy Kloter, Jeremy Kloter, Facebook, LinkedIn's fine. Outfastpropertymanagement.com. You can submit something through there. And, if you want to hit me up on my cell, it's fine too. It's 813-610-0015. We're pretty accessible in the marketplace. So happy to chat with anyone, any insight we can provide.
Awesome. Jeremy, it's always great to catch up with you. It seems like it's been years, and it has been a couple of years, but it seems like a lot longer than that, this whole damn COVID thing,
Yeah.
But it's great chatting with you, and look forward to doing it again in the future.
Yeah. Thanks, guys. Appreciate time. Happy to be on and happy to be of value.
All right, buddy. Thank you.
Thanks, Jeremy.
All right. Thanks, guys.
And that was our friend Jeremy Kloter talking about the Tampa market. It's been a while since we had a Tampa Bay area review. Stephen, what were your takeaways from our conversation with Jeremy?
Well, we've all seen firsthand what a difficult market this is. And, to stay active as a real estate investor, you have to get creative now. You can't just do same old, same old. So Jeremy spoke to us about just being ready and being able to move fast and lining up loans and working with bridge loans instead of conventional mortgages just to get into the deal. And also other strategies such as build to rent, which is something that's relatively new in our market.
And Jeremy added no text spamming.
That was just for Eric, but he, I think he's giving out your number at the end of this.
If you spam me asking if I want to sell my homes, that is the best way to not do business with me.
Anybody who wants Eric's number, just call me.
Oh, God. Stephen, I love to talk to real investors. We also like to listen to real investors. Jeremy is a guy who's always added a lot of value to our show. For folks that want to listen to other great topics and discussions, where can they go do that, Stephen?
So go to our archives, the www.investfloridashow.com, and you can hear all the prior episodes. We go back several years now, but also stay current. Download the apps and listen while you're mobile or in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.